Hello, I am Dr. Krishnat, Faculty of Finance and Accounts, Chhatrapati Shahu Institute of Business Education and Research, Kolhapur. Today I am going to talk on equity market in India. Every market is a meeting point of buyers and sellers. Markets are all about transactions. Somebody buys, somebody sells in the equity market. Trading keeps on happening at an incredible speed. Investors are able to deal in shares in a fraction of a second. Every day, thousands of crores worth of equities are transacted in the equity market in India. If you are new to markets, you should gain some knowledge before you enter into the equity market. Plus, there are different types of equity market and so you know about them as well. What is equity market? Equity market is a place where stocks and shares of companies are traded. The equities that are traded in an equity market are either over the counter or at stock exchanges, often called as stock market or share market. And equity market allows sellers and buyers to deal in equity or shares in the same platform. First things first, it is important to begin with a good understanding of what is equity market in the Indian context. Equity market, often called as stock market or share market, is a place where shares of companies or entities are traded. The market allows sellers and buyers to deal in equity or shares in the same platform. In the global context, equities are traded either over the counter or at stock exchanges. There are multiple buyers and sellers of the same equity or share. Hence, you stand a good chance to strike a nice deal at the equity market. If you want to begin online equity trading in India, you have to get a demat account. How is equity market in India? Equities are mostly traded on the stock exchanges in India. In the Indian stock market, equities are available for trading at the National Stock Exchange, the Bombay Stock Exchange, and the latest entered Metropolitan Stock Exchange of India. Shares of stock market listed companies are bought and sold. Equity share trading is roughly in two forms: spot or cash market and future market. These are the different types of equity market in India. The spot market or cash market is a public financial market in which stocks are traded for immediate delivery. The futures market is a place where the shares delivery is due at later date. What is growth in equity market? Shares or stock traded in the equity market belong to companies that show growth. Investors typically invest in growth stocks which belong to small companies showing potential for high growth rates. The growth stocks are those where investors are ready to make big bets in the live equity market, be it in India or global equity market. With the help of online equity trading, investors aim to accumulate growth stocks today so that they can them offer after immediate low prices. How do equity markets work? The concept behind how the stock market works in simple. Think of an auction house where buyers and sellers negotiate prices and make trades. Now substitute the auction house and atoms with equity market and shares. Companies list their shares on an exchange. Investors can buy shares in the primary market, that is IPO, and secondary market. The stock market is regulated by the SEBI. The equity market is maintained by stock exchanges and various stakeholders like brokers, dealers, clearing corporations, etc. It is an extended family of institutions, and this is the true equity market meaning. What are the timings of equity market? There is no 24 hours stock trading system yet. The normal trading time for equity market is between 9:15 am to 3:30 pm. Monday to Friday. On Saturday and Sunday, trading does not happen unless there are special circumstances. What is equity in NSE? Equity in NSE refers to stock market. The securities market has two segments, the new issuance market and the stock market. Currently, more than 5,000 securities or stocks are available for trading on the NSE. The stock exchange's automated screen-based trading allows investors across the length and breadth of India to trade and invest. The NSE trading system is called National Exchange for Automated Trading System. The equity space in NSE companies of cash or spot trading and also trading in equity derivatives. How can you trade in equity? To trade in equity share market, you will need to have the proper tools. Open a demat and trading account. Have funds to buy stocks and a good broker platform to execute the traders. Thanks to technology advancement, you can do online equity trading at your home office or even while on the move. To begin trading, you need to select the high stocks. Follow the live equity market to some worthy stock ideas and do some research. This will help you fine-tune equity market growth and investment strategies. How to do online equity trading? Today, carrying out online equity trading in India is an easy process. Every user with an online account has a user or customer ID and password. These credentials will help you do equity share trading on the equity market live. Do always remember that brokers take professional grade IT security, thus ensuring high quality online equity trading that is completely safe. Here is a step-by-step process. Don't forget to open a free demat account to begin investing. Log into the online broker platform. Enter the ID and password to access your demat account. Your customized page opens and thus the opportunity to trade is open. Ensure you access the online platform during market or trading hours. Select the stock to trade and buy or sell them on the stock exchange at your preferred rate. Once the order goes through, your trade is completed. In the evening, you will get an SMS notification of the trade order specifics along with confirmation of the ledger balances. What are the things to know before you trade in equity? The equity share market, be it the equity market in India or Asia, equity market is full of traders and investors wanting to make a portfolio deal. It can sometimes be a lot of information to process. Also, there are different types of equity market, hence it is always good to have some ground rules before you trade in equity. Never go against the sentiment of equity market today. The trend is your friend. Unless you are 100% sure, do not try to take totally bets. When you go against the tide, the risk factor increases. Buy low, sell high. You should try buy stocks that are trading at historically low prices and cheap valuations. When you buy such stocks, you can gain when the equity makes the next up move. Think long term. In the short term, nobody can predict what the equity market live will see next. So, it is important to have a long term view on trades that you do. Know how about intraday trading? Before you jump into the stock market bandwagon by listening to random tips, it would be better to know how to do intraday trading for better results with your trades and investments. A rupees 1000 stock is not expensive and rupees 5 stock is not cheap. Some investors approach equity investing in the same way they buy clothes or vegetables. They seem to think if a stock is priced at rupees 1000, is it costly than a stock that is rupees 100. Use valuation to understand exactly what is cheap and what is expensive. Thank you for watching my video. Please subscribe it.